Hi there, it's Bill with Smart Trades. It's Wednesday, August 3rd, around 12:30 p.m. Pacific time. And let's start off with the S&P. Just a little business first. If you'd like more frequent updates, please visit smarttrades.com. I update usually throughout the day, as well as several times in between these videos, sometimes almost every day in terms of newsletters. And if you want more frequent updates, please visit smarttrades.com. At any rate, obviously I was wrong about the triangle. Here's the chart that I originally had projected for a low around the 1285 area basis the S&P cash. And we had been actually holding there for a couple of days in that general vicinity. However, yesterday we slammed through there with a vengeance, and we also broke the long-term trend line, which is a bit of a cause for concern. That said, I'll get into the details on that in the later charts. Here again, these last couple charts, and several of these charts were actually posted yesterday. And one thing that I would like to bring your attention to on the S&P pattern, I've talked about this before, is from the February peak, we have a series of ABC patterns. We have an ABC down of A, ABC up of B. I think this best counts as an ABC down of C to the June low, and the rally back up to 1356 or so can be counted as 5 waves, but I think it best counts also as an ABC. And thus far, the decline to today's low, also counts as an ABC. You'll note here, this is the 1249 or so. That is the March low, and that was also 1.62 times A off of the July peak. 1.62 is the classic scenario for relationships between the A wave and the C wave in a corrective pattern. Now here's a chart I posted yesterday, and one possibility is certainly that we had a failed fifth, or you could count it a variety of other ways. I'm not going to get into counting it every which way, but the bottom line is that the peak at 1356 on the S&P very much could have been a failed fifth. The NASDAQ actually made a new high and can be counted as 5 waves up. That is still a possibility. So we need to be aware of that. If we get a corrective rally off of these lows, that is a very, very bearish scenario. And here indeed is the NASDAQ, and you can count again. This is a chart I actually posted back in late July, and just before we started cracking off of these highs. In fact, just before we made these highs, I posted this in my newsletter, and you can see here a pretty clear 5 waves up to that peak. That's certainly a valid count, and even at that time I had labeled this as a possible 5th wave, as a 5 of 5 with a bearish divergence on the breadth ratios. That said, it's also still possible that that is only a wave 1 up. So we have wildly divergent scenarios here that are possibly in play, and we need to be aware of that. That said, when you look at the big picture, and again, we can argue about the internals of how we're going to count this, whether this is a big ABC up from the 2009 lows, or this is a 4th wave in a 5-wave sequence. Those are potentially valid scenarios. That said, the pattern from the February peak, to my way of thinking, so far, best counts as a corrective decline. Again, the triangle has been negated. I was wrong about that. But the idea that we are in a sideways correction, basically a flat or some kind of expanding triangle, still is a possibility. From the February peak, I think is the best count up to this point. A little more detail. Here's that 1.62 times A. You can see we did dip below there. One thing I'd like to bring your attention to is today's low on the S&P cash was 1234.56. I find that just remarkable that we bottomed on exactly that number on a panic low. It's just an interesting number. No special significance other than, it's obviously the series 1, 2, 3, 4, 5, 6. That said, on a 130-minute chart, the low close comes in right at that 1.62 times A. This is frequently what happens when you have a panic type low. Breadth divergences abounded. We actually had several ahead of this, which made me think that we're actually bottoming in that 1280, 1275, 1285 area. But indeed, we've gone lower, but the divergences finally appear to be holding. That said, again, if we wind up carving out a corrective rally here, or if we take out today's lows, I will be turning bearish once again. But that said, right now we have a pretty nice scenario for a potential panic low. Here's the NASDAQ 130-minute chart. You can see the divergence there. We had a very, very sharp divergence on today's bottom. Whether it's long-term or not, we did hold. We also held on a closing basis the 62% retracement level. We never came close to testing the June lows in the NASDAQ. And so to this point, the assumption is that that this indeed is a corrective decline and that higher prices are yet to come. Again, if we wind up with a corrective rally that fails to make a new high, I'll reevaluate. Here's the S&P futures. Again, that large ABC pattern that I favor from the 2009 lows. But the main feature here to focus on is that, when all is said and done up to this point, we have what looks to be a corrective type pattern going sideways essentially from the February peak. And you can see to this point we haven't even managed to close below that March low, and possibly not below the June low as well. We'll see. We're still trading as we speak. Another thing, the Dow Jones Shanghai Chinese index. To me, this pattern is also very clear. It can be argued what the overall pattern evolving is going to turn out to be, but we see an impulse pattern up, a clear corrective pattern down, what best counts as an impulse up, corrective pattern down, and even on a short-term basis we have an impulse, and we have yet to make a new low below the June lows in the Dow Jones Shanghai. So I think on balance the Chinese market best counts as being in a series of impulses up, corrections down, and I think that supports the market in the US as well. Here's the Qs. Again, that the higher low so far compared to the June low, and overall I think that this best counts as an ABC down, and again, this could be one, or it could be a possible fifth wave that's peaked. We'll watch the rally as it turns out. The one thing that does make me wonder that it is a fifth wave is that we have a relatively short possible wave one here. So 1, 2, 3, 4, 5. Again, I haven't discounted the possibility that we put in a peak, but we shall see. The bonds, if you'll remember in my last report, I did say that we were likely to get a pop to the upside. I'll be the first to admit that the pop to the upside that I was anticipating was not the magnitude that we got. But that said, I think it's important, and this is why you like to, in some cases, just take what the market gives you and trail stops. You had a nice little corrective pattern down. It failed to even get to the trend line, and we broke that pattern on a breakout to the upside. I have a nice doji style pattern that usually indicates a top. We shall see. Again, this market could still fall apart. The bonds could still rally further, but the feature, again, to review is even if we don't know the exact long-term count, when we see these kinds of corrective declines. And indeed, this is the kind of corrective pattern that you see in the Shanghai charts, as well as to a lesser extent in the S&P charts. When we see that kind of pattern, it should get our attention, and particularly if it's confirmed with a breakout to the upside. Gold, I am far less certain that gold has peaked. It certainly exceeded my expectations, and we shall see. It's certainly overextended. It's beyond its channel. The chances of it coming back and correcting back to, say, 1600 or so are pretty good in my opinion, but I certainly wouldn't be shorting gold. On the other hand, silver has been very muted in comparison. It's right at the top of its channel. It hasn't really busted through there, and to me, I think we've got an impulse down and a corrective rally back up that more than likely is going to lead to at least a retest of the bottom of the channel eventually, assuming again that the stock market can hold and we hold on to that corrective pattern. Natural gas has failed to break out of its little channel to the downside, although we have yet to make a new low. I am less convinced that this is a corrective decline. In fact, it has developed and evolved into sort of a impulse pattern to the downside. That said, if we do break this channel, I would take a look at it. Crude oil, not as strong as I had expected, probably in sync with a weaker than expected stock market, and we broke that triangle, and we've got that panic that's weighing on crude, I believe. At any rate, I still believe that this basic pattern is an A up. We've got a corrective ABC down, and that eventually we're going to go sideways to higher once we finish this corrective decline. And finally, you'll remember that I talked about 145 to 147 being an area of resistance for the euro, and I was expecting a corrective decline off of the highs. Indeed, that's what we've gotten. We got down to about 141 or so, and from there it looks like the rally is impulsive. This is also consistent with the idea that the stock market may have bottomed. Those charts are to some extent in sync. And so I would expect higher prices here in the euro if we can manage particularly to get back above this peak here in the 144 and change area. That's about it for now. Once again, if you do want more frequent updates, please visit smarttrades.com. And thank you so much for watching. Click on the like button if you like the video. And I really appreciate you watching. Thanks. Have a great day. Bye-bye.